So for anyone who doesn't know, Kyle and Kenny created this app right here that I always use. So he's one of the partners that created this, and you guys just did something new where it's now working for Windows 10 or something. Is that what you?
Yes, we're in beta for that, and we hope to be released by the end of the month or so.
Oh, very cool. Okay, so tonight, just diving into the example that I have, and this is started with. Well, actually, I met this guy 2 years ago or something. After I had spoken at a club in Southern California, he and I went out to lunch one day just to talk. And what he does is, like a lot of guys, they're buying pools of non-performing notes. And he's got a reperformer now. And this is in Michigan. And he wants to sell it. So this is the email I get. Hey, after the great to talk to you and reconnect, blah, blah, blah. I'm looking to sell this reperformer, pay history for 18 months. So that's good. That's a pretty nice reperforming history. If they're going to go non-performing again after they perform, usually it's inside of 12 months. So if you get well past 12 months, it's considered pretty solid. Anyone else have feedback or experience with that? Anyway, borrowers are on a forbearance trial modification program. See all the docs. Payments are $550 a month, and it's being serviced by Peak, so a third-party servicer. Borrower likes to make two payments at one time. That's fine. They want to pay it down early, but I'm only going to assume that they're going to pay the minimum amount required. Property is worth $70,000 in a hot market. I'm not sure what that means. Borrower has a great job making $60,000 annually. The note has upside because the new owner of the note can either keep the borrower on the payment plan or put them into a permanent modification. Borrower owes close to $100,000 in balance, arrears, and late fees. And so he wants to get some cash back out. I have no idea what he paid for the note. My guess is 35 cents on the dollar or something. Okay, I would like to get somewhere between 53.5 and 55,000. So basically, 55% of UPB, unpaid principal balance. I'm going to send you another reperforming note right after this email. Most importantly, I want to move these fast. These two notes, and I asked him why fast, and he says, well, the investor that went in on these with me, has some other deal he's doing or needs cash or whatever. These two notes you're going to see are super clean and two of our better notes from the portfolio. Please do not shop these out. I get this all the time. Just like Ken was saying, if you talk like a broker and you don't talk like a buyer, you're going to lose people. All the time they're just sick. They're just hounded and hounded and hounded by people who are, trying to make a buck in the middle, but their word isn't good because they don't know what to offer. They're not the ones that pull the trigger and do the underwriting, and so there's just like hordes of people, trying to do the note broker thing. It's even if you are going to broker, just think of like a buyer and talk like a buyer anyway, because like I don't consider myself a broker, but I sort of am because it's not really my money, but it's me and my investors' money, and I end up usually servicing, some of this paper. I always leave it with the existing servicer just because it's easier for everyone. But anyway, so just case in point, don't act like a broker. Everyone's sick of brokers. Okay, I want you to reach out to single investors that are interested in steady yield. That is most of my back pocket investor types. This note can be sold for 65 to 70,000 in 12 months. Okay, and he says that because he has a bank, an institutional buyer, that I guess has some sort of a program that after 12 months, successful 12 months on a permanent modification, they will buy the notes at 65 to 70. Well, whatever what that represents, basically 100% of value of property at about, so if it was 100,000, yeah, so basically 65% of the UPB, even if it's 100% of the BPO, the broker price opinion. So anyway, after 12 months on a permanent modification, they'll buy him, for a pretty good price. So he's actually, even though he needs and wants cash now, he's kind of like, doesn't want to give up. He knows that he could sell this note 12 months from now if he goes from a trial modification to a permanent, and they keep paying for 12 months. He can get this much money out of it, 65 to 70,000. I don't know, who that person is, and I don't care because that's not my part of the business. If I could receive the lump sum now, that would be my main goal. So if he can get his 55, he'd just walk. Let me know how you can structure it. And for me, so here's what he has. He has a UPB, so unpaid principal balance of about 100,000 with arrears and late fees and all that. He says the value of the property is 70,000, and he says that the buyers for 18 months has been paying 550 like clockwork. But his perfect picture is he wants a buyback agreement. He needs some cash now, but he wants to be able to buy it back, so he can resell to the institution after a year. So he doesn't really want to take that much of a discount. So that's where he's at. And just to bring up, let's see, copy of the note. I didn't do everything, but just as an example, this was an institutional note back in, can you guys see this? Is this big enough to see? Okay, June 10th of 2004. Original note balance was 97.5. To this lender, whoever it was, 8% interest. It was a 30-year monthly payment, $715, and now they're only having to pay $550, so that helps them out. So that's an example of the note. And then the recorded mortgage, that was recorded June 30th, 2004, and all this matches up with dates and stuff. MERS is the servicer on this thing. I guess it doesn't say that here. Anyway, so I'm just looking for that the original recorded mortgage was there. And I don't deal with, institutional paper hardly ever, but this is a guy that I know, he's a really solid guy, and he's just looking for a custom solution that, and I'm looking for, decent yield, worth my time to put the paperwork together, and solves a problem for someone and creates an opportunity for one of my investors. So then after that, I'm looking at the assignments. So does it make sense? Does it follow? So it went from, so then this was 2 years later. MERS assigns it to JP Morgan Chase, and it's all the same stuff. They, in this case, wrote in the legal description. And then in 3 years ago, how long is that? Gosh, 2011. Okay, so this guy picked up this portfolio into his non-performing portfolio back in 2011. At this point, he's got it paying. And, so JP Morgan Chase as trustee assigned it to him. So now I can see that, okay, from this I got, who I'm going to put on my note purchase agreement. And I'm also seeing that he's the legal owner of the note and chain of title. Of course, when I go through escrow title, a title company or an attorney, they're going to make sure that, all of this is good too. But I like to just see that I'm not spinning my wheels right up front as best I can. He would love to just sell a partial, so to speak, but it's more like a buyback. I was thinking I would structure it like a partial, but I think it's better just to buy the whole note and then give him an option, record an option, because he says, well, how do I know that whoever, you and your people, not that I don't trust you, but like if I sell this to you and you take full assignment for just like the next year or two, how do I know you guys won't assign it to somebody else? And I go, Well, if it's a partial, you can have an attorney, or you can have the escrow company or a neutral third party hold everything. And just like a contract for deed, you can pre-acknowledge an assignment back to them, and all of that can be kept score by a third party or an attorney of some sort. But then I thought the easiest way to do it would just be take a full assignment instead of a big partial. Just record an option for him to buy the note back. Does anyone else have like a comment?
That'd be a good way to do it.
Yeah, to me that's easy. And I told him, if he goes, okay, I'm going to buy it back within 18 months, because then I can, sell it to the institutional buyer and get the upside. I don't want to give away all the upside if I don't have to. If you can't pay like 55,000 for this note, and I go, okay. And but after that, I want to tell him, like, after 2 years, if he doesn't buy it back, I want a way to just finalize it. I don't want to be hanging out with a buyback agreement, for years on end. So I just told him, after 2 years, your buyback agreement's going to expire. So I think that's a logical way to do it, is just say, give him a 24-month option to buy the note back at any time for the unamortized balance of the note. So I don't know. That's what I'm thinking of doing. This is just like evolving. And when he presents me what he wants and needs, I go, well, what do I want to need? And what does my investor want to need? And what does he want to need? And try to figure out how the paperwork should match. So, but a lot of times I just sort of make it up. I try to make it up as I go. So what I'm looking for is safety, right? I want to be at 65% of the value of the property or less. If you're making a loan, it would be LTV, loan to value, but this is investment to value. I want no hassle. I don't want hassles. I've had about 3 to 4 of my notes in the portfolio be a headache this last year, and it soaks a lot of time. So what I'm looking and a lot of energy at times. So what I want is something that's really structured to make my life simple. So I'm going to sell it to him with recourse. That means if I don't get the payment, I'm looking to you to keep me whole, because I don't want to chase it down, right? It's already being serviced by a third party. That's great. So I don't have to be the primary servicer. This is tighter from a regulatory standpoint on a homeowner anyway. And it keeps my life simpler. I only sort of subservice it, which he's doing also. He's subservicing on his own. He has a huge incentive. If I give him a buyback agreement where he's going to get a huge upside if this note performs well, he has a huge incentive to make sure I don't have any trouble. And he already has a relationship with the borrower, because he's the one that got them to start paying again a year and a half ago anyway. So it's logical to keep him engaged. And so I'll just, hey, Sam, I got a problem. Not only do you need to put money in my bank account, but you need to see what's going on with this deal, and you're going to keep me whole the whole time, in the meantime.
Hey, Don?
Yeah.
On the modification that these borrowers now have, was all of that recorded and done so legally, or?
Yeah, apparently it was done, and I didn't make there was too many private informations on that thing, that it was done through through Peak, through the servicer. And so to me, it looks like, I don't know, it's not like I deal in this, but all I know is that, he knows what he's doing, because he's doing
So
it.
how long has it been performing with the modification payment?
Well, it's been a trial modification, so it hasn't been formalized. Otherwise, he could sell it for $65,000 right now to an institution, so they've been talking to it as a forbearance/trial modification, and that's 18 months of perfect pay history. So at this point, he's he's going to right before I buy it, he'll convert it into a permanent modification that I guess is recorded. I'm not sure what they do in Michigan, but and then I'll take assignment, and then after 12 months, if they continue to pay, he can then buy it back from me and then sell it to this bank that he knows for quite a bit more than I would pay for it. And so anyhow, then I'm looking for a minimum 12% yield on something that's super simple, keeps my life simple. I mean, it's not sexy like 25, but this is solid to me, and I need a little bit of a spread for the oversight and putting together, and just at least some fee to make it, worth my time to put it together. And I know, Ken, you're always telling me to not work on marginal deals. And I don't know if this is marginal, but it's, if I can keep my investors with deals that, keeps their money at work and all that, and just keep a flow, sometimes it's worth it to just do a fee for the flat rate and, catch my big ones on the other side. But anyhow, so that's what I want. So basically, then the thing that happened is, okay, so right now I have to first figure out, well, 65% of what? He said it was worth 70,000, and then the BPO came back at 51.3. So that's a whole different number right there. So that's good to know. I haven't gone further. Like I said, this is like evolving as of the last day or two. I will also go and look at, Zillow and ePraisal and the other things, just and Rent-A-Meter, and just see, just try to get an overall picture of the value of it as well, not just going off the BPO. So my max ITV is 6, so that works out to 51.3 times 0.65. So then I come back, that's the most I can be exposed on this property. My investment to value maximum is right there. And so let's put that in there. I know this is paying $550, but it's not really paying $550 because Peak is servicing it. So that's $20 a month. So really, I'm going to count it on what I'm really getting in.
Are they servicing only the principal and interest?
Pardon?
Are they servicing only the principal and interest, no taxes or insurance or anything?
Yeah, there's no impounds on this. And so that's the other thing I said, okay, tell me about property taxes. Oh, they owe $4,000 in property taxes, and they're on an installment payment with the county. I said, well, that's got to be paid. You got to cut out of your note proceeds all of the back tax. I'm not taking anything, subject to some superior lien that I don't want to have to, keep track of like that. And he goes, okay, that's fine. So giving him 24 months. What is that? Yeah. So this is the deal as it's stacking up. If he buys it back, I'm just saying at the end of 24 months, and I wonder where, I guess I didn't pull up that amortization. So then I use T-value to try to figure out, okay, how does this deal come together? Okay, so on this is my Exhibit B, which I usually call it Exhibit B because usually in my partial purchase agreements, it's called that, but I'm going to have a different type of arrangement. But anyway, I go, okay, well, here's the max amount we're going to put in. Say we close at the beginning of February, 33,345. I want 12%. Here's the money I'm getting in. And so this shows me how that he can buy me back at any point for the unamortized balance that's shown over here. And he has up to 2 months or 2 years to do it. And if he buys it back on the very last payment, it would be 28,000 and change. And so he knows that, at any time he can buy this back, and then he can get his upside, right? Because he can sell it for $65,000 or $70,000. And I'm happy because I got a really chill, what I feel is relatively safe deal, for the reasons we already talked about. And he doesn't have to walk away from the backside. So anyway, does that make sense?
Hey, Don, on the house itself, I'm sure you don't know much about Michigan as well, where this house is located.
Mm-hmm.
The 30-day quick sale said around 46. What happens if the house needs some work and stuff? And, let's just say you had a foreclosure and it ended up being yours.
Mm-hmm.
I would make sure that house has at least got all the working parts. The roof is good. It's got there's not a whole lot of rehab going on that needs to be done. I would check that. You'd almost want to get an appraisal on the property rather than a BPO.
Yeah, I think that's a great idea because as Susan and Chris know, I mean, we're going through a problem deal right now where apparently a lot of the work I thought was done and that the note seller said was done didn't appear to be, because we took this property back and then there's like a big problem with the roof. And that just created, issues. Plus, and I don't know what happened before or after, because the property had been vacant apparently a couple months before we got it back deed in lieu. But it's like, darn it, it's like I don't you that those interior photos, even if it's kind of a hassle and whatever, it's it's really a good deal to go for it, because
Also, too, Doc, he needs that money right away. Supposedly, that's what
hmm
he's talking about at the
hmm
beginning. I wouldn't offer him 33,345. I would
hmm
offer him 30,000 or less,
Say what?
because I would offer him 30,000 or
hmm
less, because if you're going to let him buy back that note and then he can sell it to an institution for a pretty good amount, he's got the upside. You don't have the upside. He's got the upside. So, and 24 months is not a long time to have whatever return you're going to give to your investors. If it was 5 years, it would be different. 24 months, it's almost like before you know it, you're going to have to reinvest that money. So I would make it a little bit more favorable in your terms more than theirs, especially if they need the money quickly for whatever reason they say they are.
Yeah, I mean, that's good points, and it's just yeah, it just depends on what's worth it to what party. But I really like your idea for sure of getting into your photos to prove condition, because you said the quick sale, which I did see that. Actually, it's not that much percentage wise below. What was it? 46.5 or something.
Yeah.
So basically, if you took that number instead, and like I said, I haven't formalized any of the numbers yet with
Which is the
him, but
number you need to take. The 46.5 is the number that you need to take. That's a 30-day quick sale. I mean, that's what you'd have to do if you foreclose.
true. And have you guys noticed the BPOs? Sometimes they're low and sometimes they're high. So it's it's all sort of take it with a grain of salt to a certain degree. But was it 30? Gosh, yeah, 32.25. So that would be a more conservative number, just in case something happens to him or his objectives change and I end up owning this, long term. Even though the UPB is very high, 3 times this amount, I might want to know that if I end up with it, that it's going to be really, really hard to lose money. So good, very good point. Very good point. Um, then, so just drawing up investor amortization, lots of people who aren't active in the business, like many of you guys are, a 9% yield that's very passive is extremely attractive. Most of this is, well, no, it's 50-50 interest. So I just figured out, okay, to get a 9%, here's, I left in the future value there and the amount here, and I may change this, Ken, depending on what the due diligence shows up. And then if I put in 9%, 24 months, how much payment do they need in the meantime? So that's what that worked out to, and I stuck that into T value as well. So they know at any point, what are they going to get cash of? It's almost, basically, it's like a loan is what it is. So that's how it shows up. And even though, Ken, like, you're really interested in long term, and I agree with that. A lot of my investors are more comfortable within that 6 to 12 months range, actually. And then with other ones are, they like a combination. We'll go short term with some of these interest only type notes, and then combine it with some of the longer amortized notes at a
Yeah.
discount, and just, switch it up like that.
I mean, it
So
just depends on how you look at it. As long as you're funneling that money quickly, if they're interested in 6 to 12 months, if you sell something for them or something sells, funds, whatever, in 12 months and you don't find them a deal for another 3 months, then that's not so good on the yield. It's no longer 8%. It's a lot less than that.
yeah,
So
no, no
it
kidding.
just depends on, how fast you can put that money back to work for them, and, whatever. I mean, time value money, a lot of people have no concept of that anyway. So
Yeah, well, the thing is, a lot of people are feel very conservative and unsure about the market. In fact, didn't the Royal Bank of Scotland just come out and warn all its investors to sell everything? Global
Yeah.
markets, keep notes, keep bonds, but but we could very well have, who knows what happened in the global economy, and so you want to, be positioned as well as possible or not be committed to something for a really long time. That's how a lot
Yeah.
of people are looking at it. Or I have one guy that they're new to notes and loans and stuff, and so he has this certain Excel spreadsheet calculation that he's come up with to figure net present value. And so no matter what I send him, the amortized products never come out well because you get back some of your principal, so the total amount of interest. So he's very heavily, he just can't see past sort of the interest only sort of products because it's so simple. You put out this much money, that same money comes back, and then I know exactly how much interest I'm getting, even though I'm trying to educate him about you get your principal back, so your investment's safer and safer and safer, and then we can put that money out again to work. But anyhow, some people just don't even want to think about it, and or an older lady who her daughter doesn't want her to invest in anything that's over 2 years, 3 years, because she doesn't think her mom's going to live that long. So everybody has that different things, but I really appreciate your insights on that. So good comments, as I'm thinking of just sort of putting this together, solving a problem for somebody also having what I want to be as a safe investment for my investor, and to have something that doesn't take too much of my time. So the investor will get, a short-term commitment, a really decent yield, and should have, good safety there. And check this out, if the guy doesn't exercise his option, let me put this back to the overall number. Then I basically have, God, I don't know what that would work out to, but let's say I've got 300 more months of this payment coming in. Well, then the yield jumps up a whole lot higher, So
What was the note originally made for? How long was the note made for,
it was a
Don?
30-year note. The original balance was 97.5, and it was a 30-year AM.
And how long has the note been paying for?
It's reperforming now for the last 18 months.
In that example that you showed us, it was 50% interest and 50% principal. How can it be so much principal?
That was the investor amortization for someone coming in and getting 9% on their money, bringing in 33. It was this number, right? So that was just the investor amortization that was half and half. But the amortization to the seller, actually, I don't even have that one because I haven't recreated the peak servicing thing. But their balance is like, I don't know, 100,000. Let's say it's 5%. I don't even know exactly. I haven't gotten that far. Yeah, it's about like that. So basically, this is the underlying note ish, right? But right now, this guy just needs some cash, but he doesn't want to give away so much of his upside that he knows how to put together later. So I'm just trying to figure out something that makes sense for me to do. Like, I like this guy. I trust him. I think he's a really good guy. And then if I have more deals that are just simple, like short-term notes that my investors can feel happy just having some money to work for a certain time, then that if I keep my investors happy, then things are good. Even if it's not a killer deal, just keeping some flow going is good too.
Yeah, absolutely.
I've even put together a couple lately where, I can't, there's really no upside at all in it for me until like 10 years down the road, like, because, I may buy 15 years worth of a note, but my investor only wants to stay in it at 10 years. So basically my whole profit is realized after they're paid
Yeah.
off, and I keep the remainder 5 years. It's still
That
great for
makes,
me.
yeah. That makes sense for you too because you're so young, Don.
Yeah, I'm so young. Thank you, Ken. Anyway, so that was kind of my basic example. Someone named Russell, welcome to the call. Do you have a mic?
Yeah, hi, can you hear me?
I can. So tell me about you. You're new.
Yeah. Thank you so much. Casey Jackson, I partnered with him on some deals, and he sent me an email, said this would be a great thing for me to listen in on. We just started basically, real 1 minute background. We started this past year, 2015, doing owner finance wrap notes,
Right.
and we did about 15 of them together, and some more separate. But so we're just kind of figuring out the whole note thing, and I'm just a fly on the wall, trying to absorb as much as I can.
Well, glad to be here. I know you guys have been very successful. Your main business model is just buying foreclosures and flipping them, right? I
It's a
mean, you
big
guys
one.
have done really, really well in Austin, right?
Yes, ma'am. Thank you so much. Yes, Austin, Houston, Dallas, San Antonio, and Corpus. But Austin seems to really produce more than all of those other markets for us.
Yeah, when I was talking to Casey yesterday, he said an interesting thing is that, part of what fueled the business is easy money because of all the oil money, right? Rich oil
Mm.
friends who, just call him up, hey, I need this much money, wire it over to me, blah, blah, blah. And he's going, the oil owners aren't feeling as rich these days.
Yeah, there's some truth to that.
Yeah, so they're still rich, but the because of the price of oil, it's kind of drawing things up. What's your perspective on that? Because I think the low price of oil is going to be real one hell of a kicker for the country. And well, I don't know how it all works together with the global economy.
Yeah, and I'm in the same boat. I've I've devoted my last 2 years to real estate and kind of the inner workings of different angles of that, but I don't know very much about oil.
Yeah, well, if it's low, all these companies can't refinance and they got balloons coming up. So it's to me going to create another big credit crisis again or something.
And
I
I
don't know.
think you're right. You hit the nail on the head there. I mean, tying, when you can tie those things in, that's when you can see things ahead of time and make really smart moves.
Yeah, well, I keep it pretty simple because, I kind of sort of a one or two trick pony. It's like, okay, I kind of know this thing. I think I'll just keep doing this and work in the different angles of it, owner financing and notes. And you guys adding wraps, help makes you have the ability to help a lot more people, that have
Yeah, I love
marginal
that part.
equity. Yeah. So that's very cool. Well, thanks for showing up. We're at the end of the call. And gosh, this one went almost an hour. Any last things before we just quit for the night? Really, really appreciate all the awesome feedback, by the way. But any last
Dawn,
things?
Dawn, I'd like to
Yeah.
give you 1 minute on this area that you're considering this note in.
Yeah.
I have family there. I can give you a quick overview of where you're thinking about investing.
Yeah.
It's
Yeah.
Redford, Michigan. It's a western suburb. It's the first western suburb adjacent to the city of Detroit.
Mm-hmm.
Thing I noticed is that the original note balance was about 100,000, give or take.
Right.
Originated in '04.
Right.
That's probably what this property was worth back then. Okay, and
Mm-hmm.
what you have is someone that rode out the storm, so to speak, and fortunate for them, this gentleman bought their note and they're able to stay in their house. But
Mm-hmm.
if it was 100,000 in 2004, in 2008 it was 50,000.
Right.
The area was quite devastated by foreclosures. Now that's come full circle, not quite full circle, but most of the way where, you know, generally speaking, this house is probably worth, the 70, 75, $80,000 that he's indicating. Um,
So you think the
so
BPO is low on it?
I think the BPO is low, and I think your coverage of 30 some thousand, assuming that it's probably worth 80, your coverage is good. And
Okay. Thanks for the
the
heads up.
yeah, the foreclosures have dried up there. You have people that stayed in their homes, and then you had a lot of people that snapped up the foreclosures and are renting them, waiting for the market to come back and
Mm-hmm.
cash out. So that's just a quick 60 seconds on the neighborhood you're investing in there.
Hey, I really appreciate that. That's good. That's good info and wonderful. Thanks so much, Dave. See,
You're welcome.
a community of people. It's really, really
Absolutely.
important. Okay, well, great. Well, thanks again, everyone. You guys mean a lot to me, and I appreciate it. And if you have anything like for next month, one of your own examples, either something you have a question with, or just you think that would be a good example for everyone. Actually, Ken, maybe we can use. I mean, your deal sounds like a really cool one to, just use as a monkey for our next transaction review. What do you think?
Yeah, I don't charge too much, John. You know, my fees for doing this are very small.
Yeah, I'll check with my daughter and see if we can afford to get you on board for the next one, because it's really
Okay.
fun to use everybody else's deals instead of just my own. Although, I mean, so great for me to have your input on this. So thank you so much, all of you. So have a great night, and we'll catch you next time.
Bye, Don.
All right,
Bye,
take
Don.
care.
Thank you
All
so
right,
much.
bye bye.